নামাজ পড়ছি আম্মা। Welcome back to ICT Trading Concept. How are you all? I believe you all of you are okay, and the voice is okay as well. I believe it. Okay. If only if you can't hear me or there is a issue about voice, then you can write it down. Otherwise, please don't comment until I ask for. Because I would love to complete the analysis first. Then I will talk about the. I will ask you. I will tell you to write it down if you have any confusion, anything. Then you please write it down. I will do it by my way. I'm not going to reply your I am not going to clear your doubt, or I'm not going to ask, replying your any question or anything. Okay, I need to finish this by my way. It's because I have to do it for myself as well. So let's start from the dollar index. You have to start the way I'm starting. So tomorrow is the first day of of a month. Okay, it can be the any kind of month, January, February, March, April, any month. At the first day of the month, after at the weekend, the last weekend of any month, you have to go to the monthly chart. From monthly chart, you have to start the analysis. You have to start it from dollar index. As this is December, so it is little bit different, but I hope you will get the main point. That is my hope. So you can see from very beginning, this is the chart for dollar index. What it has done, it went higher, it went lower, it has cleared all of this sell side liquidity. This is the monthly chart. George, please just remove your comment, brother, please. It's a request, okay, brother, please, just a request, please remove your comment. I will ask you to write it down something, or I will ask, okay, but before that, nobody, please don't comment. So it has it went lower, it has taken the sell side over here, it retraced from there, it went lower, it has cleared this sell side liquidity again, then market went higher. Where did it go? The last parallel gap, or you can say not last parallel gap, there is another one parallel gap. So we have been retraced from this parallel gap. That's good. Not I don't need the precision for the dollar index. It's good. So price has retraced from there, it went lower to this leg. Okay, this whole price action is inside this leg. This is the leg. This whole price action is inside that leg, and right now price is over here, that is inside that leg. Now I don't need all of this information if only if I see any kind of very clear liquidity. As I can't see any liquidity, that's why I need the price action from before. I can see market went over there to that fair value gap. What is that fair value gap? Market has taken buy side liquidity, market structure shift to fair value gap 1 2, breakaway gap. This is your entry point, right? Price went higher, came to this specific fair value gap, it went lower. Now because of the seasonal tendency, or what to say, I don't know exactly, all the everything is currently running on this world. I'm expecting price will go higher. Okay, because of that, I'm not saying this fair value gap will hold the price and it will send it back to clear the sell side liquidity. Look at this, sell is very clean from the monthly chart, but I am not expecting market is going to take that sell side liquidity. When I will change my mind, if I can see this swing low is broken, market went lower, that swing low. Okay, how it will break this low? It will just give me a big run. Okay, there will be a big run. I mean, the 22 YT model, it will clear the buy side liquidity. This will be my market structure shift with a very nice fair value gap. Then only then I will expect market is going lower. Until then, I am expecting market is going higher. It will go through this breakaway gap, and then it will take that buy side liquidity from there. That is my expectation. Okay, I'm just going to remove this one, because if this low is broken, then I will mark that low, those lows for my liquidity. But right now I'm just here. I can see price came here, it has been rejected from there, it came lower to this fair value gap. Do you see any other fair value gap over here? Very little fair value gap over here. There is a fair value gap that has actually traded over there, and there is another one fair value gap over here. Now I will mark something else, but this fair value gap is much more cleaner. Okay, I will do one more thing. Okay, this is the low of the leg, and this is the high of the leg. Above this is the upper 50%, this is the lower 50%. Okay, every retracement, if it is a retracement, then it has to come below the 50%. Now there is some other level, 0.618%, 786%. Okay, the optimal trade into whatever it is. There is some other level as well, but I would love to see market came back again below the 50%. So I can see it came below the 50% and it has been rejected from that fair value gap. I don't need this one. Okay, I hope you will understand. This is the way you are just reading uh, from the monthly chart. So price came this fair value gap, it went higher. Where did it go? There is another fair value gap. When price came lower, it has made this fair value gap. So it came that fair value gap. Now it has been rejected. Where did it came? I can see there is a water block over here. So that is order block. It come here, okay, to that order block level. I love to see it will go higher now. Now I told you I will change my mind that market is going toward that low only if I can see this low is broken. This specific low, okay. If it is broken, then I will expect market is going lower to take that sell side liquidity. Otherwise, I'm still expecting that market will go higher and it will take the buy side liquidity. That is my expectation. Now what I have done, okay, I think I can, yeah, it will be rejected from this order block, it will start to go higher. That is my expectation. Now I will go to weekly chart now. That is my weekly chart. From weekly chart I told you about this buy side liquidity. I was believing that this buy side liquidity will be taken. Now I marked it as my I fair value gap. Why I have done this? I would love to talk about the I fair value gap now. This is a old high, okay. This is a old high. So market has doing something here. It will stay here somewhere inside this low and this low, okay. I don't need the information from the fair value gap over here, and I would love to mark that fair value gap as my I fair value gap. Then I need to see about this. I mean, I am carrying about this swing high. Is it take that highest high? I mean, let me tell it clearly, more clearly, okay. Price is going here to here, okay. If it failed to take that high, instead of, I mean, in the meantime it has made a fair value gap over here, then it went lower again and there is another fair value gap. Those two fair value gap is overlapped, okay. Though both of them are overlapped, then I will use this fair value gap as my I fair value gap. That means I will expect it will go to that specific fair value gap. I would love to see it won't go I mean, it won't go above the consequent encroachment of that I fair value gap. We can go, but body will close at least at the level of the I fair value gap consequent encroachment or below the consequent encroachment of the I fair value gap, and it will go lower. It will take some kind of liquidity. I mean, I don't need to go here to take all the liquidity over here. It will take some kind of liquidity from here, okay. Then this I fair value gap is valid for me. This is for me. I'm not telling anything here. I mean about ICT. ICT told about the I fair value gap. You can check them or whatever. But this is the thing I love to mark for my I fair value gap. Now look over here. This high failed to take those highs. Okay. This high failed to take those highs. When it went higher, okay. This this run has two fair value gap. One is here, one is here, okay. Look at over here, I'll just mark it. Which one is going to be my I fair value gap? Okay, I have marked that one as well. Now look over here, when it went higher, failed to take that buy side liquidity. It went lower again with a big run, just go up and down. Here is one fair value gap, here is another fair value gap. I would love to mark the lower fair value gap. The upper one, this is the highest one, okay. I don't like to see the highest one as my I fair value gap, but obviously price can go over there. If it went there, then this time I will be wrong. I am wrong about this fair value gap. I saw most of the time the lower one works perfectly, because if it is overlapped, okay, this candle, when it went through this fair value gap, this candle has made this fair value gap. Look at this fair value gap to that leg, and to that leg, this is the fair value gap, and here this is the fair value gap. This candle high, this candle low. This candle high actually closed at the level of the consequent encroachment of this fair value gap. That means I have more space that is overlapped with that fair value gap. This will be used as my I fair value gap. Here, that's why I write it down, I fair value gap weekly. Okay. I am just going back to show you another example of the I fair value gap so that it can be clear. Okay, then I will come back again here to dollar index to discuss about the weekly bias or anything. Okay, so here I will go 1 minute chart. Let me actually find the I fair value gap. Okay, where you? Let me actually check it, because I have posted that. I need to see the date. Which date I have posted? Brother, I really didn't find any perfect example for you. The one I showed it to you already. I'm just going to give you that one, okay. What date was that? That was December 1st, okay. December 1st, what time? Can I see the time? Mm, uh, okay, just let me check the time. Can I get it or not? 7:58, 7:58 p.m. That means 1st December. So I think eight, 10. Where was it? I think it was here somewhere. 9. Okay, 8, 9. This is the place. Okay, yeah, that was the I fair value gap I have marked. If you remember, I would love to show it to you. Then I will go for it. Okay. Here is my I fair value gap. I have marked it, and this is the first time I uploaded and I asked you what is I fair value gap. Okay, that was my I fair value gap. So far I remember. Okay, look, when this is the highest high, okay, price came lower. It is a very clean, nice run. When price went above, but it failed to take that buy side liquidity. Instead of that, it went lower. When it went lower, there is another fair value gap that has been overlapped with that fair value gap. This is my I fair value gap. This specific fair value gap is my I fair value gap. Okay, I'm going to take my entry to that fair value gap, to this fair value gap, and I will expect nobody will close above that consequent encroachment. That means we can go, obviously we can go, but body will close at the level of the consequent encroachment of the I fair value gap, and or below the consequent encroachment of the I fair value gap. So this is my first rule for being this I fair value gap valid. Inversion fair value gap. Okay guys, and now I'm repeating this again. This is my observation, guys. I have tweeted this as well. This is my observation. I saw this thing work most of the time. Now if you ask me, can you please show me where ICT talked about this rule? No brother, I can't show it to you, because ICT talked about the I fair value gap, but he didn't say, I mean, I don't go the with the general one. Okay, I saw this type of fair value gap work perfectly because it failed. What is the logic? The logic is, when this is a very nice displacement, it was trying to go above that highs, but it failed to go over there. Instead of that, I got another run, the opposite side. Okay, when I see this type of things, if I would love to mark some kind of liquidity here that is very clean, I'm very much confident that market is going to trade that fair value gap, not this one. Okay, not this one, this fair value gap. So I'm not going to take my entry here. I would love to take my entry when market will come here. If you see, just a second. Okay, look, where did I took my entry? Just a second. Look, see the candles. Okay, because I actually recorded later, I was in my phone. Look, one candle, this candle went through the I fair value gap, then this candle. Okay, when this candle actually came to the lower part of the I fair value gap, look at this three candle, then you will understand. See, so I took my entry over here. Just look at this three. Okay, so that was that fair value gap. I took my entry when it has touched the lower part of that I fair value gap. I took my entry over there, and then I took some partial here, and then I stopped out over there. So this is my I fair value gap. The rule is, there is a high. Okay, price is going lower. It gave me a very big run, but this run failed to take the buy side liquidity. Instead of that, it went, maybe it will be go through this low, or it will make another equal lows by that run. It doesn't matter, I don't care about that. I need a big run over here. When I will see this thing, if I can mark some kind of liquidity below my market, I always tell you, brother, please go with the liquidity. Never ever take your entry without seeing the liquidity. If you don't see the liquidity, please don't take your entry. How beautiful the trade setup is, I don't care. You have to have some liquidity first. Then this gap, this gap, and this gap, if they are overlapped, okay, so you can see this gap and this gap is perfectly overlapping. Price came back here, take your entry, go for some kind of liquidity over there. Just go for that. Now you don't need to hold it until here. If you see this low and this low, they are relatively equal low, you can maybe, I mean, just go for that if you see any kind of liquidity. So that is the I fair value gap things. I will ask about this I fair value gap later. I mean I will talk about them later, but before that I would love to complete my weekly analysis. Okay, and please don't comment, because I will ask you. If you have any confusion or any question, please write it down to your notebook. Then later tell me which time frame where I have to go. Then I will go over there and I will talk about that. Okay. So if you remember, last week I told you this is the breaker. I mean, not last week, before the last week maybe. So far I remember when this candle was actually forming. This is the weekly chart. That was my breaker. I told you, if I see this breaker can hold the price, I would love to see it will hold the price. Okay, so until now it hold the price. Now why it went through this? As per ICT, that is mohawk. Okay, I don't know the exact pronunciation of that word, but that is mohawk. Okay, mohawk, okay, something like that. So that is mohawk, and I believe it will go higher now from that breaker. Why this is breaker, brother? You gave us some rules and it is not working with that rules. Okay, let's see. Price went lower, went higher, it went lower. Okay, low, high, lower, low. Between two lows there is the highest high. When it went through the old lows, did it trade any fair value gap over here? Please, brother, can you please just remove your comment, please, brother? That's a request. Please watch the see the my pin comment, please. That's a request. Whatever you have to say me, please ask me later. Please remove your comment, please. So low, high, lower, low. So between two lows there is the high. Okay, so that high is my breaker. When it went through the old lows, it has traded a fair value gap over here. But brother, there is no fair value gap that it has been traded. Okay, let's see. This is a fair value gap from weekly chart. And now if you don't see any fair value gap from weekly chart, just think like that way. This is not a fair value gap. Okay, it didn't trade that fair value gap, no problem. It has traded the monthly fair value gap. This is from the monthly fair value gap. I'll go to monthly chart one more time. This is the monthly fair value gap, clean fair value gap. Okay, now brother, you can't show give us some kind of monthly fair value gap when you are in weekly chart and you are going to mark this one as your breaker. Obviously I can give you the, I mean, higher uh, time frame fair value gap, order block, breaker block, anything I can give it to you when you are in the lower time frame. And if I am giving you the fair value gap or anything from higher time frame, that is more obvious. Okay, so price will remember this fair value gap when you will be in even in 1 minute chart, because this is from higher time frame. Now if you see a fair value gap over here, and if you go to the monthly chart, if you don't see anything over here, then this fair value gap has no value to monthly chart. Weekly fair value gap has no value when you are in monthly chart, but monthly fair value gap has the value when you are in weekly chart or daily chart or maybe 1 hour chart, 50 minutes, everywhere. It is very important because this fair value gap is from monthly chart, from higher time frame. That's why when it went through this fair value gap, I mean through this lows, it has traded this fair value gap. It went through one more time. It went through the high. Now it has established as a breaker, bullish breaker. If you ask me, brother, what do you love to trade? I love to trade the breaker entry. In my opinion, this is the perfect breaker, and I would love to take my entry to that breaker. I would love to do that. Okay, I don't want to see this breaker will be broken. And yeah, 100% is not 100% correct price action you will never expect from here, but 95% of the time I see this type of breaker works perfectly. It doesn't if it has traded the old lows only, and this low it has didn't trade any fair value gap over here, I don't go for that breaker. Okay, now ICT didn't talk about this. Okay, here the part I'm telling you, ICT didn't tell it, but I saw when actually trade the fair value gap, this breaker worked perfectly. I saw that. Okay, this is my observation. I am not adding some rules. I am not telling that ICT has told something else. I am giving you something else. I'm just telling the same thing ICT told. I am just giving you something more, w- so that you can go for the perfect one. In my opinion, okay, you please don't just go and jump to the market, take your entry depending on my on my lecture. You go back, do the back test and see this thing when happen, the breaker work or not. Okay, now I don't know it is going to hold it or not, but I would love to see it will hold the price and market will go higher. Now this order block level is from monthly chart. I would love to see, I mean, add this order block here from weekly chart. This is the consecutive order block, so two candle, the opening is my order block level. I don't go the highest of the week, that level I don't count, I count the opening. And from weekly chart I would love to mark that order block. Now you can ask me, brother, it didn't touch. Yeah, I can see it didn't touch, but I will be careful until it went through this breaker. I will be careful because it can come to that order block level. It can come, okay? So I will be careful until it went above the breaker again. So from weekly chart, I would love to see market will go higher from that breaker level. Now I will go to the daily chart. This is the way I actually break down the market. Now this is the daily chart, and sorry, from daily chart you can see this breaker has failed. It went through this breaker, okay? It went through this, but this breaker is from weekly chart. If you go to 1 minute chart, you will see thousand of candles over here, thousand of candles, okay? So this breaker is actually forming in weekly chart, so I need to see the weekly candle. The weekly candle, this breaker can hold the weekly price or not. From weekly chart I saw it has holded the price perfectly, so I am just removing this breaker block right now because there are so many lines. I don't want to see so many lines over there. I want to talk about the daily chart now. Above here, it has been rejected from the weekly fair value gap consequent encroachment. Okay, it has been rejected over there. Above that high, there is my buy side liquidity. Here, that swing high, specific that swing high. Why that is my buy side liquidity? You brother, you always tell us to go for the clean buy side liquidity, not a single high. Yeah, I know. It's a common question to all of you. So this high and this high and this side, they are all relatively equal highs. No brother, it has taken the buy side liquidity. No brother, that is shallow run. I believe when it will take the sell side liquidity, any kind of sell side liquidity, and then it will start to go higher, some kind of sign it will give me. I believe that buy side liquidity will be triggered. As my monthly expectation is market will go higher, that's why I have marked that single high as my buy side liquidity. From monthly chart, I am expecting market will go higher. From monthly chart, okay? That's why I have marked that single high as my buy side liquidity. But before marking that high, I have another buy side liquidity. Look at this. This is very clean, okay? Now I am going for the highest buy side liquidity. If you see this thing, what did I tell you? Just sorry, put your buy side liquidity above the highest high. So that is your buy side liquidity right now above this high. Look, all of these are now relatively equal highs. This is a level, this is a zone where retail trader sold the market, okay? And this low is their target. This is the low where they has targeted. I think the upper level is clear to all of you. If not, I will ask you, okay? Now what price has done? It went higher. It tried one more time to go high to take that buy side liquidity. It failed. It failed to take that buy side liquidity. It went lower. Is that a displacement? Yeah, brother. It's a very nice displacement. Okay, let's see what it has done. It has given me market structure shift. This is a fair value gap, and one more fair value gap is over here. You can see there is one more fair value gap. So two fair value gap. Let's come to the first fair value gap. In the meantime, it has traded the monthly fair value gap low. See, this is the monthly fair value gap. It has traded the monthly fair value gap low, went lower. Where did it came? The last fair value gap from that leg, from here to here. This is the last fair value. No, brother, why you are marking this one? You should have marked that one. You didn't do it. Now, when price was here, you didn't mark it. That is also a leg. Yeah, when price is here, okay, it's just here. I am marking the lowest this one, maybe this fair value gap I'm marking that is actually the last fair value gap. I saw price actually went through all of this fair value gap, all of this fair value gap. Price went through them. When price went through them, I can see this is the place where is the fair value gap, last fair value gap. So I am removing all of this fair value gap, and I'm just going for that one. When this one is failed, this one is failed, it went more lower. I'm going to mark another last fair value gap. This is my last fair value gap. Every time I'm using the last fair value gap three way. All of you know how to use the three fair value gap. Either it will come to the consequent encroachment, reject, it will be rejected from the consequent encroachment, upper level It didn't do it. It went through this. I will now look it the way it should work. It will be rejected from the consequent encroachment. It will come back again to the lower part of the fair value gap. Then it will went I mean it go lower. Now if it would love to go lower, where is your sell side liquidity? Look at those lows. This low and this low. They are relatively equal lows. This is a very clean sell side liquidity. But brother, you told us that you will go for the. Am I online or am I offline? I think I'm in online. Okay, I am in online. Sorry, that is my mistake. Sorry, guys. I'm in online. Sorry. So what I was talking about, there is this equal loss. Okay. Now you can ask me, brother, from monthly chart, you told us that market will go higher. Now when you are in daily chart, why you are asking for that market will go lower and it will take the sell side? I think it's good now. I'm sorry for the of the internet. I'm extremely sorry, guys. Extremely sorry. So what I was talking about, I was talking about like when in monthly chart here somewhere. Okay. Now the week can come very low. It can come very low, but the body has to close inside that breaker. Now when I'm in, what happened over here? The body has closed inside the breaker. That means breaker has hold the price. The wick went lower. Now when I am in daily chart, it's closed below this breaker. That means it has traded over that area. It has traded that area. Is this breaker failed to hold the price? No, it didn't fail, because this breaker is from wicked from very clean sell side liquidity over here. Look at those lows. This low and that low. They are relatively equal lows. Market can easily go toward that sell side liquidity, and it can take that liquidity. Okay. When I will be sure that market is going to do that, look at this fair value gap. It has made this. I will be pretty much sure that market is going to take that sell side liquidity. I will be pretty much sure. Okay. Okay. So let it go. I mean, the internet. Oh man, maybe I can't continue today because of my internet. Oh, I was busy whole day. I just came home and I saw the internet is working perfectly. I thought let's go for the internet has started its, I mean it's showing its true face statement. Okay, let it go. If it doesn't work, then I will see it. So it went through this breakaway gap. It came to the last fair value gap from the daily chart. It has came here. This fair value gap has hold the price. Price has started to go higher. Where did it go? To the low of the breakaway gap. It has been rejected from the low, I mean the consequent encroachment. It come back again to the low of the breakaway gap. Now if it can go through that fair value gap, try to understand, brother, every single thing is very important, very important. If it can go through that fair value gap, I would love to see this sell side will be taken. Look at this low and this low, they are relatively equal lows. I would love to see that market is going to take that sell side liquid. Now if you see this fair value gap is respecting, price is respecting this fair value gap, then I would love to see it will go through this breakaway gap, and we will see expect some kind of very clean higher up, very clean higher up. If it failed, I will go for that sell side liquidity. Now, when I will be very sure that market is going to take that sell side liquidity after tomorrow's opening, because Sunday opening is very important. It has a great role to play to the price action. So I need to see the price action from Sunday opening. If I see something that I mean very important from Sunday opening, for example, if I see price has actually opened below this fair value gap, just price has opened below that fair value gap, that is kind of sign to use that fair value gap as a resistance. It will use that fair value gap as a resistance, it will go lower. Now if I see price has opened from here somewhere above the closing from Friday, it has come over here somewhere, it has opened. Now after opening that, if I see it went lower, came to this fair value gap, and you have the new week opening gap over here, it will be range bound. It will do this type of things. Okay, I mean sideways run. Everything actually is depending on your Sunday open. You will understand when Sunday will open what I actually try to talk. Now I would love to go to 1 hour chart. Here from daily chart, what is my expectation? I am just going to repeat it again. If I see price come to this fair value gap, this fair value gap has hold the price, send it back, it went through this breakaway gap, I will never expect it will go lower again. If I see price went through this fair value gap, try to understand brother very clearly, it went through this fair value gap, it will come back again to this fair value gap, it is going to take that sell side liquidity. Okay, in that case maybe we can use this daily fair value gap as well, that is later. So now you have two direction depending on that only fair value gap. You have two direction from daily chart. Now from hourly chart, I would love to go to hourly chart. Oh fuck, I don't think so I can continue today's stream. Not, not possible. Not possible, not possible. I don't think so I can continue today. It's because of the internet. You can write it down. I mean, if you would love to tell something, you can tell. But I am just going to complete it. I mean, I don't want to continue today's session. But if it is possible, then I'll just complete the DXY. So you have to think that I will talk about every other market today, but it is what it is. Okay, if you remember, I have marked that constant encroachment. I wanted to see that market will reverse from that constant encroachment and it will start to go higher. Now I will think, I mean, I would love to see if it can go higher now. That's good. If it can go through that low, this hourly fair value gap will be targeted. I mean, it will tap over there and then it will go higher. Okay, I'm sorry, the internet is shit. I'm sorry to invite all of you here and complete the session like that way. I'm extremely sorry. Okay, yep. Yes, you can. Yeah, you can write it down. I mean, if you would love to write it as anything, you can write it down, but it is what it is. Okay, I'm sorry because of my internet. I have nothing to do. And it's election time in our country, so we are actually facing so many problems right now. The internet problem, the even if the, I mean, sometimes the Facebook doesn't load over here, so many problems. Okay, I'm extremely sorry for that, but uh, anybody has anything to tell, I mean, about the I-FVG or anything? I was thinking I will complete, but maybe I can't do it. Okay, because of my internet speed. Okay, do we idea with the okay, thank you George, but extremely sorry, brother. Thank you guys, I really am sorry. Thanks for being with me, and I'm now upset. I had a lot to talk today, a lot, but I can't continue. See you guys. I will talk to you next. Hence, every single person, please be careful this month. Anybody, if any of you trade real money, very careful the last month and the first month, December and January. Very, very, very careful. Try the lowest lot, maybe one contract, take one trade. If it is loose, don't even try to mitigate your loss. Don't even try it. Okay, if you take on winning trade, just close your chart. This is for only December and January, these rules. Okay, go with your lowest contract. If you are profitable, just close your chart. If you are loser, then close your chart. Don't try to mitigate your losing entry, please. That's a request. Okay, okay guys, thank you for being with me. I'm just going to close it. I'm sorry because internet is shit now. It's kind of, I maybe I can't do it. I'm sorry, brother. See you guys.